15 years ago, shortly after 9/11, the news media reported that cases of insider trading occurred connected to the terror attacks of September 11. A financial pundit commented at the time in US television, "This could very well be insider trading at the worst, most horrific, most evil use you've ever seen in your entire life." However, the mainstream media dropped the issue a few weeks later completely and forever. Moreover, in 2004, the 9/11 Commission report officially stated that no such thing as insider trading connected to 9/11 took place. The suspicious-looking trading activity pre-9/11 proved consistently innocuous. However, there are a few academic economists who differ with the 9/11 Commission at this point. One of them works here at the University of Zurich, and I will visit him now in his office. First of all, Professor Chesney, thank you for having us.
You're welcome.
You have written with two colleagues of yours a scientific paper on the topic of 9/11 insider trading. This is a topic that did not generate a lot of scientific research. Why did you decide to cover this topic?
You know, in my capacity as a professor, in particular as a finance professor, my duty is to analyze financial imbalances, crises, but also frauds and financial crimes. And that's what we try to do during something like 10 years.
Now, related to the topic of 9/11 insider trading, we have to talk about put options and call options. What are put options?
A put option entitles its owner the right to sell a given stock at a given date or during a given period of time at a given price, the so-called strike price.
Yeah, so you can buy something, and when the underlying price drops, and you have calculated this correctly, you can cash in some money.
Yes, if there is a drop of the stock price, yes, and you can cash in a profit, yes, it's true.
Your research article has the title Detecting Abnormal Trading Activities in the Option Markets. Can you elaborate on this paper, please?
Yes, we have defined, first of all, 3 criteria in order to identify a possible insider trading activity. First criteria, the volume, or the so-called open interest. That is to say, more precisely, a very strong increase in the open interest. Allow me first maybe to define what the open interest is. It corresponds to the number of outstanding options in the market. So a very strong increase from almost 0 to maybe 500, 1,000 option contracts. One contract, by the way, corresponds to 100 options, just to be clear. Second criterion, the return or the profit, a very strong return. And when I say very strong, it's not 5 or 10% or 20, it might be 3, 4, 500% in a few days or in a few weeks. And finally, the last criterion, the most technical one, the position is not hedged. If you're an insider, you don't need to hedge because you know, or you think you know, what will happen tomorrow. So we tried to check that the position was not hedged. Just to be clear, it's not proof per se of insider trading activities. It's a statistical study. Okay, just to be clear, in order to be sure that it is a proof, we would have to have access to names. We used the financial databases without names, only prices and volumes. So it's not proof per se. But still it's interesting, as you're going to see in a minute.
Yeah, but you did not have the actual trading data from the brokers.
No, we purchased financial databases, CBOE and other databases in Europe. We analyzed around 9 million of financial transactions, quite a lot, from the US, from Europe. But again, without names, only prices, volumes, etc., etc.
Mm-hmm. And how many of those trades that you took a look at were actually informed trading activities?
less than 0.01% were suspicious, just to be clear. So 1 out of 10,000, less than 1 out of 10,000 transactions were suspicious. I say suspicious because, again, it's not proof per se. So we were very conservative. It's a very small number.
Mm-hmm. So you took a look at different stocks from different sectors, and one of them is the airline sector.
Yes, airline sector, banking sector, and other insurances. But just to be clear, the study does not focus on September 11th. The study focuses on insider trading. We defined our criteria. We applied our econometrical methodology, and then we identified specific cases.
One was the airline sector.
Yes, true.
And there you found some suspicious trading.
Exactly, mainly with three companies: United Airlines, American Airlines, and Boeing. Let me give you an example.
Yeah, please.
American Airlines. The put option with a strike $30, maturity end of October. This put option gave the right to its owner to sell the stock at a price of $30 at the end of October. Here were the small graph. On the right-hand side, we have the return of the position. On the left-hand side, the open interest. So as mentioned previously, one contract corresponds to 100 put options. The black bars correspond to the volume. Before the month of September, the volume on this specific option was almost zero, no trades. Then you see first trade, and then a big trade on September 10th, one day before the terrorist attacks. Here you see something like 1,500 contracts, meaning 1,500 times 100 put options. So a strong increase of the open interest, which corresponds to the first criterion of this analysis. Then financial markets were closed from September 11th until September 17th. Markets reopened, and you see a huge black bar, meaning a huge volume, and the open interest decreased on the 17th of around 500 contracts, and again a few days after, at the end of the month, of around 500 contracts. So 500 plus 500, around 1,000 put option contracts were exercised a few days after the terrorist attacks.
Yeah, and are these then the profits here that we see?
The profit. So let me give you an example. The value of the option, of the specific put option, on September 10th was $2.15. Why? Because the value of this stock, the spot price of this stock, was on September 10th $29.7. When markets reopened on September 17th, a big drop in the stock price was witnessed, so from $29.7 to $18. And when the stock price decreases, the put price increases. And the put price went from $2.15 on September 10th to $12 on September 17th. Imagine the return, around 450%. That's why I say huge return, and it corresponds to the second criteria. Third criteria, this trade was not hedged, by the way. So a strong return. Now let me compute for you the profit. So something like 1,000 contracts were exercised in a few days. 1,000 contracts times 100 put options per contract times something like $10 profit per option corresponds to around $1 million profit for this specific option. Why $10 profit? Again, the investment was very interesting. Imagine you buy a put option at a price of $215, and a few days after you sell it for $12, meaning that the profit was indeed around $10 with a huge return.
Yeah. Okay, this is what you have found out for the airline sector. But you also took a look at two other sectors of the economy. One is the banking sector.
Yes.
Tell us about this.
So along the same lines, we identified a few dubious, suspicious trades with various banks, more precisely Bank of America, JP Morgan, Merrill Lynch, and Citigroup. For the first three banks, they were located either in the two towers or nearby.
Mm-hmm.
Why Citigroup? It's an open question, but the travel insurance unit of Citigroup was confronted with the problem of terrorist attacks. Huge losses were generated.
Mm-hmm.
And the total profit, by exercising these put options, corresponds to about $11 million.
Yeah, and there were reinsurers that were attacked via put options?
Also, so we identified two suspicious transactions, one for Zurich Re and one for Munich Re.
Yeah.
Also occurring along the same lines that the example previously shown. A strong increase in the open interest, a very high return, and in most cases, the trade was not hedged.
And the trading activities that you took a look at, those trades were exercised?
In most of the cases, the put options were exercised. True.
So the money went into the pockets of those who purchased those put options.
In other words.
And these put option trades are sometimes criminal?
This is a question. I think we should reopen the case because, as I said previously, it is a statistical study. We spotted dubious cases, but now we need a political decision to reopen the case, to find the names, and to tell whether or not these cases are indeed suspicious or if it's not the case.
So you're calling for a new investigation?
Yes, I call for a new investigation.
And the investigation of the 9/11 Commission was not sufficient?
On this dimension, not. Take the official report of the Commission, about 500 pages, on the specific issue of insider trading with options. You find a few sentences and a footnote. It should require something like 100 pages, and everything will be put on the table and everything will be clear.
Yeah, as I have mentioned, this topic of 9/11 insider trading does not get addressed big time in academia. I have asked an econometrician by the name of Paul Zaremka, he works at the State University of New York, why this is the case, and this is what he has told me.
I think the real reason why they don't get addressed, and I'll just be frank about my profession, they're scared. I mean, ordinarily, I know my profession. I mean, ordinarily, if you have a topic which is as hot, maybe not as hot as this, but a topic that's not quite so hot, but has huge social implications, you want to research it because you can get your career really moving forward. I'm just talking normal academic terms. You can get your career really moving to investigate such a topic. So you would think that there would be other econometricians out there who would want to study each one of these studies and do their own study or criticize these studies or whatever, but do it in a very serious way, and they'll move they'll move their professional work forward. And it's not happening. And I think the reason for that is what I said. They're afraid. This is too big for them to want to deal with. They're afraid that their answers, that even getting into the topic gives it credence. Let me say it again. Even getting into the topic legitimizes the topic.
Is this true according to your experience?
I agree with him. You know, to put official statements into question is not always easy. You know, it might put in danger an academic career. So it's a tricky issue.
Mm-hmm. And why do you think that the financial media is not interested in this topic? I mean, I am here, but I don't see, for example, people from Bloomberg or whoever talking with you about this topic.
I think basically for the same reasons that you mentioned for the academic world.
Mm-hmm. They are afraid too.
Yeah, I think because it could put in danger, this time not an academic career, but a journalist career.
Mm-hmm.
So I think basically for the same reasons.
Yeah. Can you tell us, please, what is the significance of this topic 15 years after 9/11 took place? Why are you still interested?
Because we should, again, I think it's a responsibility of finance professors to shed light, to identify frauds and financial crimes. It was not done 10 years ago, it's not done today. So that's why we have to dig deeper here.
There was one journalist who said that this could be very well be insider trading at the worst, most horrific, most evil use that you have ever seen in your whole entire life. This was Dylan Redigan, who said this back then for Bloomberg in September 2001. Now, does this look as the most horrific, most evil use of insider trading? And should people pay attention to it?
It might be the case. Again, what we did is not proof per se of insider trading activities, but we deal with suspicious cases. And that's why we need to reopen the case.
Yeah, but you would have to really nail it down to the names. And then you would need to have the actual trading data. And for example,
and the names,
we
yes.
know that the SEC did look at this trading activities.
They should give the information.
Yeah, but they destroyed it. And this is officially on the record. And now the question becomes, is this a scandal that they have destroyed evidence connected to a criminal case?
Yes, it's indeed a big problem. Because as long as the media and the public will not have access to the information, many people will put into question official statements.
Okay, Professor Chesney, thank you for this interview.
You're welcome.
And so, there you got it. According to scientific research, it is likely that insider trading connected to the terror attacks of September 11, 2001 took place. Or, as Dylan Redigan said back then, this could very well be insider trading at the worst, most horrific, most evil use you've ever seen in your entire life.
It's all forgotten now, the trouble and the pain, forgotten every word I said, forgotten every tear you shed, we're still in love. It's all forgiven now, we're back in lover's lane, and though we wandered from our way, the corner's turned and we can say we're still in love. For you and I and everybody must learn to give and take. We'll find, like everybody, it's worth it for happiness' sake. It's all forgotten now, we're happy once again, our troubles gone beyond recall, and making up is best of all, we're still in love.